Weakness in global equities rubs off on D Street. The Nifty slips below 22,600 and breaks crucial technical support levels. The correction in broader markets is worse. Both mid and small cap indices correct over 1%.
Pharma stocks the sole sectoral gainers today. Granule leads gains with its foray into the CDMO space. Lupin is higher following a US FDA clearance for its Somerset unit. Dr. Reddy's and Laurus Labs are among the notable gainers.
The correction in IT, especially mid-cap IT stock, continues. The sector is the top loser today as stocks continue to correct following global IT majors. Endava's guidance cut last week. Persistent Systems and L&T Technology Services are the top losers.
The NSE announces that the Jio Financial and food delivery aggregator Zomato will enter the Nifty at the expense of Britannia and BPCL. The changes will be effective from the 28th of March.
NTPC Green corrects over 8% as 3-month post-IPO shareholder lock-in period ends today. Brokerage Nuvama says 2% additional equity is now available for trade.
Hello and welcome to Chartbusters. We are tuned in live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and with me today is Vinny. Hey, Vinny, as you can see to the top of the screen, so crucial technical levels are getting broken. So the Nifty is hovering below that 22,600 odd mark, and the Nifty Bank as well is seeing selling. I'll tell you what, today the problem is both the big pillars of the Nifty, that's the tech as well as the banking index, both of them are seeing sellers. So there's no real place to hide out there, and that explains why we're seeing this amount of selling. The 48,500 mark, that's very, very important. We're trading above those levels. We went down to around 48,300. You don't want this level to break decisively. And on the Nifty, you don't want the 22,500 mark to break decisively. Just one word. Yes, we're down. But if you look at the number of stocks that are advancing, when we started off trade, it was 250. Yeah. Currently, it's around 500. So select stocks are staging a bit of a pullback. So just trying to look at things a little bit positively. That's one factor that came on my radar. At some point of time, I think we'll get the advanced decline ratio up for our viewers. But on that note, let's welcome Shivangi Sarda from Motilal Oswal Financial Services, who joins us on the show. Hi, Shivangi. Good morning. Good to see you in. Shivangi, what's your trade? Would you be daring enough to go in there and buy the Nifty and, put a 50, 60 point stop loss? Or do you think we're headed lower? So any kind of bounce will be a good shorting opportunity.
Very good morning, Nigel and Vinny. Thank you for having me. So we've seen that, there has been selling pressure, which has been intact in the market, and any minor bounces are being utilized for selling opportunity. And the Nifty put call ratio has also sunk, along with continuous FIIs selling and the FIIs long short ratio stuck in the range of between 13 to 16%, which clearly indicates that, there is some sort of rejection at the higher zones, even though we've seen some sort of bounces last week. But the index, failed to hold and, maybe cross about 23,000 marks. So that clearly became like a psychological zone over here. Today, after the gap down opening as well, we are seeing weakness that is continuing. So we are on the sell-on bounce stance for Nifty with a target of 22 marks and a stop loss of 22,800, which earlier used to be a support and now will act as a resistance. So clearly a role reversal has played over here. Now, talking about Bank Nifty, this index is also in pressure and we are witnessing some sort of, grave weakness over here as well. Now, some of the smaller banking names which were supporting the index are now giving up, which is causing some sort of a concern for this index. Now, there is some sort of resistance which is placed at 47,500. Which the index is nearly, failing to surpass right now. So sell-on bounce to continue here with a target of 47,750 and a stop loss of 49,000 levels.
Okay, Shivangi, thank you so much for joining in with us and giving us the update in terms of the technical charts for both Nifty as well as the Nifty Bank. But let's move on and talk about the new listing on the D Street. Electrical equipment and solution provider Quality Power Equipment made a muted debut on the D Street today. Listing with gains of about 1% to its issue price. Right now, it's come back on the red side because of the muted trade we're seeing overall in today's trading session. Now, to talk about the outlook of the company, what are we expecting going forward? We do have the management who is joining in with us. We have Bharindran as well, a joint managing director at the company, as well as a whole-time director of the company joining with us. Good morning, and thank you so much for joining with us on this show today. Let me start by talking about overall the performance of the company. Let's skip the listing today because we are seeing a muted trade coming in. But outlook for the company going forward. Revenue for the company, 28% growth in the last couple of years. CAGR growth is what we're seeing, which is much better than the peers. Now, is this only a factor of low base, or do you expect this to continue going forward, the strong growth that we've seen? What is the outlook there?
Good morning, ma'am. At the outset, I would like to welcome the new investor family. They've supported us in the turbulent times, and we are happy, and I believe that we shall make up to the trust what they've reposed on us. With regards to the sector of energy transition is growing quite well, as we see more and more renewable energy plants coming in this country and across the globe. The critical use of power electronics in the grid transition or grid interconnection would increase, which means that there are brighter days for the industry. And being one of the key players in the industry in India and across 100 countries, we believe we stand to have a good chance.
All right. Hi, sir. Let's focus on a couple of aspects. Some money was taken home by the OFS route, but there was a fresh issue of more than 200 crores. And for that, you're going to be utilizing that money to buy 51% stake in Meru Electrical. So what kind of revenues will you accrue from here? What kind of synergy benefits will you accrue from this 51% buy? And is there a plan to buy the remaining 49%? Also, there's a capex of around 27 crores. What is the asset turn you'll get on this 27 crores? What kind of revenues will you get? Please go ahead, sir.
Meru is again a peer. It's a high technology product of instrument transformers up to 500 kV. They have a fantastic product range, a very large capacity. They did about 220 crores last year in revenue, are on the strong growth trajectory. We believe in the global market there's a strong demand for similar products where we can combine our product range and sell together to customers to get a better advantage and a better pricing. We believe as we grow further, we will be adding more companies in the kitty so that we can increase our product offering to the customers and across all the globe that we have conquered. The cost of customer acquisition and the time is virtually zero when we go the inorganic route. As we speak about it, we are also focusing a lot of expansion organically. If you see, we have been historically having in excess of 5% as R&D spend as a part of our revenue. This CapEx is a part of that, where we are integrating certain cable facilities and test facilities for R&D and capacity constraints wherever we have to be able to help us.
51%, you are spending around 120 crores. Remaining 49%, will you be buying or no?
Correct, sir. And we have a call and
what kind of revenues will you get from this?
We believe they have a revenue last year in about 220 crores, and they are in trajectory to do similar or better.
Okay, all right. And you will be buying the remaining 49% for a similar valuation?
We have an inflation-adjusted valuation that will go forward, but that's a part of the board call, and I would allow them to take a decision at an appropriate time. At this moment, our focus remains on integrating products, synergies, and customers across the globe.
Okay, and what about the few concerns that are there in terms of, have you witnessed any disruption in terms of trade, supply chain issues, the Red Sea issues? What is the scenario currently, impact on freight rates for the company, and do you see this going forward in FY26 as well?
There are very few players in the world for the kind of products what we do. In the US, I believe there is no competition at this moment, so we do not really see a trade barrier at this point. We are supplying to some of the largest utilities in the Europe, in Middle East, Asia Pacific, and Australia. We do not see at this moment supply side disruptions, even though there were some issues with the Red Sea conflict. With the war now clearing up, we believe that we have good times ahead.
Okay.
We do not at this moment face any supply chain shortages.
Could you quantify what would good times be? You have been growing at a CAGR of high 20s. So 25-30% revenue CAGR, is it doable? And also margins, traditionally have been in low teens. Will you continue in that ballpark? Because in the first half of the year, it went to around 20% or thereabouts. So revenue growth as well as what kind of margin outlook should we work with?
I believe we are in similar territory. The first earnings call will be very soon. I believe you would see what the 9 months and the 12 months outlook looks like, but I believe we are in a good space. The industry is going at an average of more than 50%, and I believe we should be closer to that.
50%, 50.
The CAGR for the HVDC and fax business in the world is about 75% at this moment.
So for your business, what will you grow by though?
I would not like to speculate on the forward market, sir, but I would say that in excess of what we have done last year, we would be targeting.
We'll have to wait by for a number out there. Just give me one more number. What is your working capital days right now? Because your profitability has been going up, but the cash flow from operations hasn't been improving. Could you tell us why is that?
Apologies, sir. I'm an engineer. For what we say, these are a little bit deeper questions, but I can tell you that our cash flows are not very stretched. These are easily manageable numbers. We have a very low credit margin with our global customers. It's normally 45 days end of the month, and we get other than MSME suppliers, most of the suppliers are Indian. So about 45 days credit. So normally our cash flows are between 45 and 60 days is the net. What we say, but I believe there's a lot of cash also on the books right now. We have an excess of 100 crores already on the books.
Okay, and if you could just, lastly, just tell us in terms of exports, is that continuing to be your focus area? What is the outlook there? And are you seeing more opportunities coming in on that front in different geographies? Anything in terms of that?
Because we work on high-end technologies, Western markets tend to be the first early adopters. We have been doing HVDC and fax projects in Europe and US, LATAM, because they have been early adoption. But as we see that in India, the new HVDC, fax and energy storage projects being introduced, we believe India will be a large market. We also are looking forward to the new orders coming in from the HVDC that has been announced in the last 2-3 months. We believe we will be a major player in that segment.
All right, we look forward to having a chat with you. For the time being, it's a bit of a subdued listing, but that's the market condition as well. What you're telling us is business prospects appear fairly, very positive, and the industry itself is going to grow. So the next time you join us, sir, we'll look forward to a guidance with regard to how you'll end FY25 and how do you see the business shape up in the next 2 to around 3 years. For the time being, congratulations on today's listing. Well, for the time being, we'll slip into a short break. You come back, we'll continue to focus on markets. The Nifty is lower, but the breadth of the market is gradually improving. Stay tuned.
Welcome back to Chartbusters on CNBC-TV18. Now let's shift focus to our special segment where we will get you a few ideas for profit from Money Control Pro. Anubhav Sahu is from moneycontrol.com is joining in with us to talk to us about the stock that he's tracking closely. Anubhav?
There are pockets where earning resilience is remarkable. So we believe CDMO industry is one such area. There has been noticeable earnings traction for the CDMO industry in recent times due to improved funding environment and global supply chain reset away from China. Now, one of the picks we like in this space is AMI Organics. It has showcased a strong ramp up for its CDMO business, due to which its pharma intermediate segments grew by 86% in the quarter gone by. We estimate that on an annualized basis, the CDMO business is already more than 200 CR, and as per the guidance of the management, is likely to grow 5 times by fiscal 28. Other than the contract with the Fermion, company is awaiting another big CDMO contract which is undergoing commercial validation. Other areas of interest remain its progress in the semiconductor and battery chemicals business, which presents growth optionality. Now, stock trades at a premium valuation, but we remain constructive given about 33% estimated earnings CAGR for next 2 years.
Thanks a lot for that, Anubhav. We'll keep an eye out on that one, Ami Organics, and maybe get the management on the channel as well in the next few days. For the time being, we'll slip into a short break. Come back. We'll continue our focus on markets and on stock-specific action. Don't go anywhere. Welcome back. The Nifty continues to trade below the 22,600 odd mark. But as we were pointing out earlier, the advanced decline ratio should come up for you on the screen. There are 520 stocks that are advancing right now, which has improved a little bit from the start of trade, which was close to around 300 shares or 300 stocks that were advancing. And from the frontline names, Eicher Motors has now moved to the high point of the day. The stock had opened up in the red. That's fighting back. And Shriram Finance as well is cutting its losses. So a couple of those names should come up for you on the screen. But let's focus on NTPC Green. That stock is trading with sharp cuts because that post-IPO lock-in has ended. Hormuz joins us to help us out with a quick analysis on that. Hormuz?
Not a very good day at the office for NTPC Green. It's at the lowest point of the day. It's a 3-month shareholder lock-in period that has come to an end in today's trading session. And as a result of which, almost 18.5 crore shares of the company, rounding about 2% of its outstanding, have become eligible for trade. Of course, we need to mention the fact that the shareholder lock-in period ending does not necessarily mean that all of those shares will be sold in the open market. They just become eligible to trade. But the opening up of this lock-in period has resulted in this sharp decline that we have seen in the stock price. Now, NTPC Green, one of the biggest IPOs of 2024 at a 108 rupee price, went on to make a post-listing high of 155, is down almost 35+% now from those levels, and even slipped below the 100 rupee mark in today's trading session. It had already slipped below the IPO price on the February 11th of this month, and now it continues to trade below those levels. So shareholder lock-in period ending, pressure on NTPC Green. Not a very good day at the office today.
Okay, not a very good day coming in there. The stock is down almost 8% as of now, day's lowest point, NTPC Green. Let's move on NBFCs. They are on focus after the RBI issued a draft rule on foreclosures and prepayments of loans. Abhishek is joining in with us to give us more details on this one. Abhishek?
Well, RBI has released draft rules with respect to levy of fees on foreclosures of loans if taken by customers. So this invites comments from, lenders or, banks and NBFCs together on the draft rules that they have formed. They insist to say that there will be no foreclosure or prepayment charges on floating rates to individuals as well as some businesses, that is small and medium enterprises. So, floating rate business loans to individual and MSCs are in focus. Regulated entities must allow foreclosure or prepayment without a minimum lock-in period. So no charges if foreclosure or prepayment is initiated by regulated entities. Foreclosure or prepayment charges, if applicable at all, must be stated in the key fact statement that they give out to the customers. So no retrospective charges or waived or undisclosed foreclosure prepayment fees. We have a note coming in from IIFL Securities, which states that PNB Housing, AB Capital, Piramal, Chola, etc. all of them have more than 20% of the book with respect to floating rate MSME or LAP portfolio. Back to you.
Okay, Abhishek, thank you so much for joining in with us and giving us the latest update on that one. But with that, we're absolutely out of time on this edition of Chartbusters on CNBC-TV18. Thank you so much for tuning in. It's a goodbye from Nigel, myself, as well as the team who put this show together.